What is relevant costing and how does it relate to decision making? Well, to start with, relevant costing is a managerial accounting concept. Okay, it relates to a spending decision. More specifically, a relevant cost is a specific type of management decision that the effect of that decision is going to directly affect whether a cost arises or occurs, or at least the amount of the cost and what will arise. So necessarily, the two are inextricably related, managerial decision making and relevant costing. Now, one interesting thing here is we oftentimes learn about escalation of commitment based upon sunk costs, that is, costs that cannot be changed. This is the exact opposite of a relevant cost. A sunk cost, something that's already happened, you can't get it back, nothing you can do can change it. Well, a relevant cost is, once again, going to change based upon the decision. So there you go. It is the complete opposite of a concept that's relatively familiar in a sunk cost. Now, why is it so important for a manager to have information about, or at least be able to identify what is a relevant cost? Well, it eliminates the extraneous information that's present in any decision. There's always going to be factors, there's always going to be considerations that need to be understood whenever making a decision. If you can identify one specific aspect, the cost effect of the decision, that oftentimes is one of the primary drivers of the ultimate decision taken or made. So, I'll give you an example of a relevant costing decision. A manager has a determination of whether they're going to continue on with the way they're doing things or whether they're going to buy a new software system that's going to automate some things. Now, what will happen is you'll have to make an initial spending decision. You have to purchase the software and perhaps have some ongoing expenses with the software. But automating a process might eliminate the need for other materials or labor. Okay, so this is a direct decision that will affect going forward forever and ever the future cost there. So it is a relevant costing decision. The opposite there, sunk cost, you wouldn't be able to make that decision and change somehow what cost occurred based upon that decision in the past. So prior to making this automation decision, you couldn't go back and change the past cost incurred. So anyway, that being said, in summary, relevant cost, specific decision that will relate to the occurrence of a cost going forward in the future.